Thanks everybody. As Smitty and Michael so kindly introduced, I've been working in the EV industry for 4 years, which is a lot less than a lot of you have. But I'm going to try to add something to this discussion here today by talking about some of the trends and the drivers of those trends when it comes to electric vehicles in Texas particularly. So let's go ahead and get into the slides. High level, we're going to talk about trends including sales, energy consumption, EVs on the roads, and CapEx. CapEx will also be part of a discussion about workforce development and how it affects our economy. When we talk about drivers, we'll talk about policy participants, the technology, the resources, and some of the risks and opportunities. And I'm very excited to go over this and happy to take some questions at the end. Let's talk about trends. Next slide, please. All right, so the good news is the way we see it, by 2033, the sales of battery electric vehicles are going to outpace those of internal combustion engine vehicles in Texas. So this is not national, this is Texas. The funny thing about it is it tracks almost exactly with national. And I've been studying trends, particularly in the energy industry, for Texas for some years, and it's sort of my rule of thumb, and it just keeps being validated. Like whatever the energy trend is, Texas does it bigger, does it first, but when you average it across the state, we tend to be pretty much similar to the rest of the United States. So we're right on track. 2033, we'll be selling more BEVs than ICE vehicles. Should be no surprise that plug-in hybrids and hybrid electric vehicles largely remain flat. Plug-in hybrids, we're talking about 2 drivetrains instead of 1. So they're never going to be as cost competitive as BEVs once you get the scale of the batteries to where it needs to be to get that parity with ICE vehicles. So what does this many vehicles selling more than ICE mean in terms of vehicles on the road? And what it means is that we're going to get to about 10% of on-road fleet by 2030. We're going to be at or nearing 50% adoption by then. So 10% of fleet, roughly 2.5 million electric vehicles is what I would guess is going to be on Texas roads in 2030. The drivers are going to be the availability of the vehicles themselves, the availability of charging, which the outlook is great thanks to the work that TxDOT has done with the money passed in IIJA. Thank you very much. And also purchase incentives, which if they are passed through the Inflation Reduction Act now before Congress, that's also going to accelerate all of this. Risks to these adoption curves are really short-term risks, and it's just about when you're trying to scale things up quickly, these things happen, and it's really supply chain and the availability of minerals. So we need minerals for batteries, but we also need minerals for everything else we're doing as we electrify our economies and energy systems. And I'll just take a moment on this slide to recognize something that I know we've been talking about it, Smitty, and I think Laura, you're part of these conversations too. As long as we've been talking about the adoption of EVs in Texas, we agreed that a great analogy was the adoption of SUVs back in the early to mid 2000s. The purchase of SUVs took off like a rocket. And we had this theory that that was the best analog, and it's really being proven out. So with SUVs, people bought them as quickly as they were available and as quickly as they could afford them. That's how people bought them here. And it's the same thing with EVs. People are buying them as quickly as they're available and as quickly as they're affordable. Next slide, please. So what does 2.5 million electric vehicles on Texas roads mean in terms of energy consumption? Well, those 2.5 million EVs are going to consume somewhere around 4 megawatt hours per year. And so if you pencil out the math on that, we're really talking about 12 terawatt hours a year of additional consumption in Texas. Now, some people might say, well, wait a minute, 4 megawatt hours a year sounds like a lot for an EV. People who are very studied might say that. And it's important to realize that in this forecast, we're not just talking about light duty vehicles. This is light commercial vehicles, medium heavy duty commercial vehicles, and buses. So the weighted average of all those applications, we're figuring around 4 megawatt hours is what that looks like. So that's the addition in energy sales. The other thing that we're going to see is a difference in peak. The peak impact of electric vehicles weighted average, we figure at about 0.75 kilowatts per EV. And if you take that across those 2.5 million EVs, we're talking about approximately a 2 gigawatt change in system peak, Texas system peak, in an unmanaged scenario. So important to note that that's an unmanaged scenario. If we want to talk about management, that's a lot of assumptions need to go into that, because there's different kinds of management. We could talk about behavioral management or management with distributed generation of batteries and things like that. And we could come to something, but that gets pretty tricky. So this is an unmanaged scenario. The other thing worth noting is that, we've got all these EVs out there, and we often like to refer to EVs as rolling batteries, right? So how much battery capacity do we have out there? And by the time we get to 2030, we're talking about somewhere on the order of 225 gigawatt hours of capacity, which it's interesting to note, just to put that in context, by the time we get to 2030, the installed base of utility scale battery storage is going to roughly equal the amount that's placed in cars every year. So by that time, the auto industry, and this is across the United States, the auto industry will be putting as much battery capacity in the vehicles that they make that year as the entire installed base of utility scale battery across the United States. Pretty interesting to think about the opportunities for managing the grid when you have that much storage capacity driving around. And I'll always say that a car and a battery, its first and foremost purpose is for transportation. So there's a lot of questions about how much you can manage it and how you manage it. But certainly there are opportunities there, and they will be leveraged. And we'll talk about some of that in the next slide. So let's go to the next slide. Okay, so when we talk about peak, the impact of peak is not going to be the same across applications. So what EV charging does to your facility really depends on what kind of a facility you are. So we've got this nice little chart here that shows differences in the impact on load versus a low and high scenarios of adoption. And before you look at the first number on the left and think 84% increase in load and think, oh my God, the system's going to break. That's not a change in the Texas system peak. That's a specific site. So if you are a highway corridor site and you're adding charging to it, you probably didn't have a lot of electricity there before. And now you've got a whole bunch of new electric capacity for charging. And especially if you don't manage it, I mean, it's going to massively change things. So you've got differences in how these things are going to impact various facilities, which frankly is going to impact the interest in those facilities of having some sort of management through battery, distributed generation, or whatever. But the next thing to understand about this is these impacts on peak, they do aggregate up to a grid level. And the ability to change this impact, these bars that you see here, anywhere from 9 to 45%, depending on the application, depending on the use case. So some use cases have a lot of flexibility just built into them, that they can manage it through behavioral charging. Some not so much. So like a freeway corridor, there's not a lot of ability to manage that. When people show up, they want to charge fast, at least not through behavioral management. With batteries, you can do something different, but we're mostly talking about behavioral management here. Overnight stay hubs. you have a lot of ability to manage it because you have people coming in at different times. Charging can be staggered through the night. Everything else, when we talk about homes and buildings and workplaces and apartment complexes, they all fall somewhere in the middle with respect to how much you can manage that charging. Speaking of managed charging, it's good for the grid. It's good for the customer. You know, if we're able to send a whole lot more electrons through the fixed assets that we have in place, and we're able to minimize additional assets that have to be put in place to accommodate it, well, then we're averaging the cost of the system across a whole bunch more electrons and reducing the average cost of power. And that's a good thing. It's such a good thing that there is going to be a lot of investment in innovation and marketing of solutions that enable grid flexibility. Grid flexibility will be a $15 billion market by 2030, and will be about 1.3 billion of that be for Texas. So $1.3 billion a year is the prize for energy companies, tech companies that want to figure out how we flex the power that people use so that we can minimize the need to add to peak for that. So this is an opportunity that will be leveraged and certainly worth being excited about. Next slide. So let's talk about what this means for investment and jobs. All of this electrification is big business, no surprise. We're talking about something on the order of $120 billion that's going to be invested in the vehicles and the chargers, the vehicles being the greater portion of that. That works out to a heck of a lot of jobs if we can win them here. And we do that by having a healthy and educated workforce that can attract it. We do that by having good state relations and policies that are friendly to these kinds of industries. And so when we have a quality EV investment plan like TxETRA has helped us put together, that goes a long way. People look at that. The states that are leading on planning for charging are also leading on attracting EV charging companies. Go ahead and go to the next slide. So what does all this investment look like, this $120 billion? Well, again, I said it's between the cars and the chargers, and there's a lot of ways to participate in those markets. Some are like Tesla, they'll do everything themselves, but we can also try to attract and locate different parts of the industry here. So this just gives a breakdown of different parts of a car and what the size of the prize is for each of them, and different parts of the charging value chain and what the size of the prize for all of those is. Long story short, we're going to spend a lot of money on this transition. If we can encourage our policymakers to attract the companies that make the vehicles here, that make the charging equipment here, the installation of things will certainly be here. But the more that we can attract here, the more we can make it a story about prosperity for Texans, new jobs for Texans, and nothing determines and bolsters the happiness of an individual like a good job. So this is part of how we win, in my opinion. And when coming back to drivers, when EVs are part of a local economic development story, it's very hard to not love them. So let's go to the next slide. Talk about some drivers. Let's go on. Okay, so let's talk about some policy and corporate initiatives. Some of this stuff, I know people on the call are probably familiar with some of these things, and some of it's even almost outdated. We're going to talk about IIJA, but we almost need to start talking about IRA as well. So glad that Smitty was going over some of that. The federal government, as you know, is electrifying its fleet. 500,000 chargers they're installing as a down payment to getting the electric network of chargers across the United States. $101 billion is being invested in new EV funding through the Infrastructure Investment and Jobs Act. And there's a graphic down there at the bottom that shows how that's split between ZEVs, clean vehicles, grid batteries, and the total EV eligible funds. States have proposed ICE bans on vehicles. Some of those, California, I know, is one of them. I don't have the full list in front of me. A number of them are committing to deploy aggressive ZEV commitments by 2025, bus commitments as well. We've got a number of utilities that are committing to electrify their fleets, including my home, CenterPoint Energy. Actually was just talking with them about their fleet electrification plan. And they're also working on creating highway corridors that will not only ensure that the charging infrastructure is there and that it works, but also where it's needed to have utilities invest in these things, the utilities that collaborate on these can support each other in their efforts to get these approved as investments. And I want to pause a little bit there, because I think that there's some things that are worth understanding about all of these chargers that we're about to put in through this Infrastructure Investment and Jobs Act. A lot of them are great. Putting them on the freeway corridors, I think that's a no-brainer. Here in Texas, we're putting them in every county. I love the simplicity of that. But there's a few rubs that we're going to need to work through. And one of them is, when you put those chargers on the corridors and it's in an electric co-op area, and that's raising the bills of people who live in the electric co-op, and the charger is really for everybody who drives from metros to metros to use, that's not an equitable thing, and that's one of the challenges that's going to need to get worked out over time. When the chargers are being put in the county seats, I believe that a lot of the electrification will follow, but it's going to be the case that there's going to be chargers that become unviable, and there's going to be a need for chargers in communities that will not be seen as investable by the private companies. And they're already seeing this in Europe. So there's a rule that's recently been passed that the utilities become the charging providers of last resort. And I think we're going to see some of that coming here. So utilities working together to support reasonable policy that's good for customers, I think, is really important. So automakers are also part of the transition as well. They're investing in batteries. They're committing to net zero targets by different years, anything from 2030 to 2050. And then you've got customers that are also helping to move the transition. So let's go to the next slide. So another thing that drives the market, as you know, it's a complex market. Preaching to the choir when I say that there's a lot of stakeholders involved in the electric vehicle ecosystem. One of the things that's going to determine the rate of speed is our ability to work together, particularly as it concerns our regulators and our legislators. At this point, some of this is still policy driven. It is very important as things are policy driven that they be just and that they be beneficial for all. So this just sort of breaks up the industry. I like to use this because it's complex. It helps me keep things straight. But large groupings. We've got market regulators, the energy industry, the vehicles industry, the EV charging industry, the finance industry, and we've got the end users. And as you look at this honeycomb, I'm always fascinated by how many more hexagons there are in the EV/SE industry. And part of the reason for that is that we've still got a lot of problems to solve there. So it's good that we have a lot of different players, and that we're working out all the challenges, like how do we make these things, economically profitable? How do we make them efficient? So our ability to be successful in coordination of stakeholders and development of technology is going to be, it's been a driver of the market and will continue to be so. Next slide, please. Advancement of technology, of course, is going to be important. It's part of how we got here. It's part of where we're going. So megawatt charging, for anybody who's a big fan of EV, the EV industry has certainly been excited by recent news around megawatt charging. In case you haven't been following, a megawatt charger can charge at up to almost 4 megawatts. It's crazy. Like, putting on my utility hat, I'm like, that's scary. Like, putting all that in, there's a lot that we have to do to make sure that we can accommodate it. But we do want to accommodate it, because if we want to be able to electrify medium heavy duty, especially driving long distances, we're going to need to be able to charge a lot faster than a couple of 350s on a battery. We need something like megawatt charging. So the onset of megawatt charging has been a game changer for medium and heavy duty transportation. And as it becomes mainstream, it's going to deliver benefits to communities, because, as you probably know, medium and heavy duty vehicles create the worst emissions that drive health problems, and also the worst greenhouse gas emissions. Wireless charging is another exciting application, or an exciting new technology that's really just going to make charging easier, more convenient. It eliminates some of the heavy wires that people have to deal with. The faster charging gets, the heavier that wire gets. You can put wireless charging on roads for buses to use, so that they don't have to carry around as large of batteries, so that when they're stopped at a bus stop waiting for a light, they're just getting a charge while they're there. So advancement of technology is also one of the drivers of the industry going forward. Go ahead, next slide. I'd be remiss if I didn't talk about circular economy and second life of batteries. So remember, we talked earlier about the risks of constraints in the minerals industry, and that's very real. I mean, we're not going to be able to scale mining as fast as we'd like to. It's going to affect the price, and to some degree that's going to change our forecasts year on year. But as we eventually get all of these vehicles in, or these batteries in vehicles, then we have a lot of mineral resources driving around in vehicles. Not so much today, but as we get a lot of these vehicles on the road, we really have a lot of the resource that we need there. So there's a number of ways that we can recycle and reuse the batteries. We can put them in second life applications. So after the battery has had its first life in a car, you can take that battery and aggregate it with others and use it for utility scale applications. And you can do that until you run out of uses for it. And after that, you can harvest the minerals, and theoretically, you can harvest the minerals and build new batteries. And I think that's an opportunity. So does the Department of Energy, and that's why recent legislation has put tens of millions, if not, I think it might be 100 million or more, into programs for battery recycling. But to look at some of these images here, you can see where policies related to materials management are, and you can see some differences in what we expect for the demand for second life batteries in different scenarios, from whether we have a breakthrough or not. And certainly hope to see through the research that we're doing a breakthrough in battery recycling. Oh, look, I had it right there on the slide the whole time, $125 million. So yeah, that's right, it was over $100 million. Okay, next slide, please. So some of the risks and opportunities, some of the great opportunities is shared mobility. Shared mobility users are the ideal first adopters of electric vehicles because they're so economically driven. They do like a rideshare driver drives at least 4 times as many miles as the average person. So you're able to spread the cost, today's upfront cost, you're able to spread it over savings on fuel over a lot more miles. So it pencils out a lot easier. And also the rideshare drivers make economic decisions about their vehicle as opposed to emotional decisions about their vehicle. And so when it comes to being able to pilot, grid flexibility services, V2G, when that becomes more mainstream, they'll be great adopters for it. So shared mobility is a great opportunity, and the more shared mobility becomes, the more we're able to leverage the higher utilization of assets. Your car at home is utilized 5% of the time. A shared mobility vehicle is utilized upwards of 60% of the time. So that creates wealth when we're able to get more utilization out of the assets that we invest in. Autonomous vehicles also have the ability to lower the cost of transportation. And we are fortunate to live in a state that has some of the friendliest autonomous vehicle regulations in the country. And so we see a lot of autonomous vehicle regulation here. Some of the risks, things that could slow us down. I talked about some of them before, that's already happening. It's going to happen. It's unavoidable, like minerals and just the speed of scaling the market and the impact that has on price. That's just part of it, but that's short term. Some of the things that are the unforced errors are broken chargers. If we install a network of nationwide chargers and they are all broken, they don't work very well. If 97% uptime is not 97%, 97% isn't even great. But if it's not like true 97% uptime because we don't have a good way of measuring it, that's not going to be a good story. Long charger queues, this is just part of scaling the industry. It's already happening. It's going to happen. But to the extent that we can have chargers that have at least some minimal amount of communications ability to let people know what to expect when they arrive, that makes it better. And the UK has really been a leader on electric vehicle policy, and they require it. They require if you're going to operate public chargers, certainly if they're government funded, then they need to have a minimum level of connectivity, including showing drivers on the road whether they're active and available, so people know before they go to a charging site whether it's congested. It become all the more important, as we have more charging sites and people actually have choice. And then grid constraints could hinder people from being able to charge when and where they need. I think that's also a short-term thing, and I think we're going to figure it out. But in order to figure it out, we really, going back to that stakeholder slide, we really need people working together so that we can, what upgrades to the grid we need can be the ones that deliver the most value to customers. I think that's really important. So I think that brings me to the end of my slides. If you go to the next slide, Hannah. So I'll take questions now.
Thank you, Michael. That was great. I'm looking for hands that are up right now. We don't have a lot of time. I don't see any hands.
Jim Klein had a question in the chat. He said, have you heard of anything about calcium ion batteries as an alternative to lithium? Is this likely to catch on? And if so, will calcium batteries be compatible with existing lithium EVs?
I have not heard a lot about calcium ion batteries. I hear a lot about lithium iron phosphate, and I hear quite a bit about sodium batteries. I know that both of the, well, lithium iron phosphate's already in production. I think about half of Model 3s are going out with them in them. They
Yeah, they are.
Yeah, they're a bit heavier, so a bit shorter range, but that's fine. That works for a lot of vehicles, and you can produce that. What's more important is that you can produce them with this essentially the same production line as you produced your lithium ion vehicles. Sodium ion is the same, and sodium is plentiful. So the great thing about batteries is that you can build batteries out of a heck of a lot of things. So it's really about finding the things that are abundant and the things that can be produced with existing manufacturing resources. That's the name of the game. I don't believe that there are any real game changers coming in the battery chemistry side of things before the end of the decade. I think that there will be incremental improvements to things, but I don't foresee any game changers.
All right, thank you. We got one more question up there from Mark.
Hey guys, I'll try to be really brief. I just wanted to ask, it feels like a year ago that a lot of the major power distributors announced the Electric Highway Coalition, and I know you mentioned coalitions in your presentation. That was kind of it. It was July of last year, and then not a peep since then. Any updates?
Not a lot of updates. So one thing that you probably know about utilities is they play their cards pretty close to their chest. So I think as soon as they saw that the federal government was going to install a lot of these chargers, that things went a bit quiet. I know that I know for a fact that coordination is still continuing, but I think that there's a bit of figuring out and reimagining what their role is, where charger ownership is needed and where facilitation is needed. I think that what's most critical here with these highway coalitions is a focus on resiliency and reliability, because I think that's really going to be the challenge going forward. There's a lot of way, when we talk about uptime for a charger, there's a lot of ways that a charger can be down. A charger can be down from a communications perspective. It can be down from a grid perspective. It can be down from a charging unit perspective. It can be down from the payment system, or it can be down at the point of connection with the vehicle. So when we talk about uptime, like what does uptime actually mean? And who's reporting on it? Who's accountable for uptime? Is the charging operator itself saying whether they're up or down? Are they holding themselves accountable? That doesn't seem like a good model. So we need some model that's going to let us know that the chargers are up and are working, and particularly in places like Texas, where people may be relying on these for evacuations and things like that. It just has to happen.